program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for being with us here on Business Now. Let's get across the action in the weekend auction markets. And across the country, there were 1,403 auctions. That was fewer than last week, but the clearance rate, it was much stronger, 54.7%. Now, some of that could be explained by the football grand finals having finished up. In Sydney, for example, there were 482 auctions. The clearance rate there, 50.6%. There were also another 1,000 private sales. In Melbourne, 577 properties went under the hammer. But look at the clearance rate here, 64.5%. That's much stronger. Another 966 homes sold privately as well. To Brisbane, 44 auctions. The clearance rate, 40.9% and 952 private sales. In Adelaide, 49 properties sold at auction. The clearance rate is 63.3% and 188 homes sold privately. In Canberra, 71 auctions. The clearance rate, again, strong, 64.8%, plus 89 private sales. And in Perth, 541 private sales. Eleanor Creagh is a senior economist, REA Group, joins me now. Eleanor, on Friday, you and I were wondering whether the Reserve Bank going 0.25% rather than 0.5% as the market expected. It certainly set fire to the bond markets and the share markets here, whether it would have an impact on the property markets, and those numbers would indicate it did.
Yeah, it seems like it potentially has given buyers that are out there at the moment a little bit of a confidence boost in terms of bidding at auction. I think we've still got that dynamic whereby vendors are continuing to reset their price expectations as well, continuing to adapt to market conditions, which is several months of price falls now, as well also probably playing into those slightly healthier clearance rates and, of course, the fact that we're rid of the public holidays.
Yes, that's right. But the strange question is, do you imagine that that is what the Reserve Bank, the message that they would have wanted to sell, to send, to say, actually, it's okay, we're near the peak of interest rates, you can jump back in the market now?
It's probably not the message that they wanted to directly send over the weekend, but nonetheless, it probably has given people that are out there kind of close to making their purchasing decision a little bit more confidence that maybe interest rates aren't going to be moving as far and as fast as maybe they'd previously expected, and I guess allowed people to be a little bit more confident.
OK, so then take me to another thing on the investor side. Take me to the way in which rental yields are sitting right now on properties. And I know every market's a bit different, but broadly, rental yields versus the interest rates that investors are paying. Because if they're paying 5 or 6% interest right now, and if their yields aren't really starting to move up, that means the gap is getting bigger that they have to fund. So there's a dilemma for the property markets, I would imagine.
Yeah, and I mean, we are seeing that rental yields are improving, certainly off of the pandemic lows. Property prices are slowing or falling, and rental price pressures are accelerating and accelerating quite quickly. So in the September quarter, rental prices rose 4.3%. That was the largest acceleration on record, actually. And of course, we do see this issue at the moment where there's a real critical lack of supply in the rental market. And one of the ways we can solve that, I guess, is private investment into the property market. We know that Australia is a country where a lot of the rental stock sits on household balance sheets, mum and dad investors that then rent their properties out. And we've seen that in recent years, there's been several deterrents towards investment in the housing market, and investors also selling out their investment properties throughout the pandemic, maybe cashing in on the capital gains. And this has led to a situation where we have a real shortage of rental supply, and that's one of the main reasons why we're seeing these rental price pressures at the moment. OK, one of those disincentives is stamp duty. And clearly, if you're buying a property and you've got a big upfront amount of money you've got to put out, that is a disincentive because you've got to raise that cash. But then the New South Wales government this week takes to Parliament its proposal to have an option that you can either pay the stamp duty right up front or you can pay a land tax over a period of time. It's going to be interesting to see how that gets through. Yeah, exactly right. And for first home buyers, this will make a material difference. Stamp duty can really add years to the first home buyer journey in terms of saving for a deposit. And we know that that is the most significant hurdle to home ownership for many first home buyers, particularly at the moment with those rental price pressures accelerating, with the cost of living having risen, with home prices having risen as well in recent years for first home buyers. We know it's very tough. and the ability to choose to pay that land tax rather than stamp duty upfront could incentivise some first home buyers to purchase sooner than they otherwise would have been able to, given that we know that stamp duty certainly adds years to the first home buyer journey in terms of saving for that deposit.
So true as well. Eleanor Creagh, always good to have you in the program. Good to see you in person today. Eleanor Creagh there from REA Group.